Welcome to the latest edition of MEED's series of webinars on the impact of coronavirus on business in the Middle East and North Africa. This is the fourth in our series. My name is Richard Thompson. I'm the editorial director of MEED, and we have a panel of lots of people from the MEED team to talk about the various issues, and I will act as moderator for the webinar. You can please submit questions or comments using the question and answer box at the bottom of the page, and I'll try and field your questions to the panelists. If we could move to the next slide. So today's panel, most of the content, all of the content indeed, is brought to you from MEED.com and MEED Projects. These are two, for those of you who don't know, these are our two core subscription information services specializing in Middle East business intelligence and data, and you can find out more on the links shown on screen in front of you. Next slide, please. Agenda for today's webinar. We've got a lot of content to cover. There have been lots of very important developments over the past week. We shall start off with a quick review of the latest numbers, cases and deaths across the region. IMF yesterday published its latest outlook for the region, for the world economy, in fact. We'll have a look at that. Then I'll hand over to Ed, who will talk about the project market. Following that, Indrajit will talk briefly about the OPEC oil deal and what that might mean for the outlook for oil prices. Colin and Neha will present their latest news from the construction market, and Colin will focus on his recent contractors survey in the GCC. Jenny will look at the power sector, particularly some news from Saudi Arabia's renewables sector, and then John Bambridge, MEED's analysis and features editor, is just finishing off an Egypt focus report, which he will summarize towards the end of the webinar. So that's our program for today. You can submit questions using the screen in front of you, and we'll try and deal with them as we go along. Okay, next slide. So this is today's panel. I won't read out all of the names. It's really just for reference later. Next slide, please. Again, final bit of promotion. You can keep up to date with everything related to COVID-19 in the Middle East using MEED.com. We have the daily updates, which Neha produces. We've got the executive briefing, which Ed produces every 3 or 4 days. And on the right-hand side, you can see our dedicated channel to coronavirus COVID-19 news from the Middle East and North Africa. Next slide.
As you can see in this slide, which is accurate of just a day or two ago, the number of cases in the MENA region is still on the rise. In total, as you can see from this table, we have 98,000, just over 98,000 total cases in the MENA region, a 31% increase on the week. And very sadly, we've got more than 5,000 deaths as a result of the virus. You can see that Iran is by far and away the worst hit country, as we know. The other big nations which have been quite harshly affected are Saudi Arabia, UAE, Qatar, Egypt, and the populated countries in North Africa, Algeria, and Morocco. So we are hopefully going to see a reduction in the increase in new cases and deaths over the weeks ahead as the curve flattens. And then
I don't know if I can be heard again. If I can just make an observation, yeah. Ed, thanks for stepping in there. On the right-hand side, I've put a box. What is quite interesting for me this week is we have seen a steep rise in cases and deaths in the GCC region. And I think this is really a sign we're now sort of accelerating up that exponential curve. And we've had estimates from the government, certainly in the UAE, will be 2 to 4 weeks in the GCC region. So I think we're going to see no immediate easing of the lockdown in the GCC region. Obviously, the quality of the data varies from market to market. If we could just skip on to the next slide, there's a couple of important issues that I think have come out. This slide summarizes some of the main initiatives we've seen by governments. I think the extension of curfews across the region is obviously a sort of ongoing thing, but we're also seeing in the UAE and Saudi Arabia and some other markets the funds, government setting up initial funds, and then banks and other big entities putting private sector capital into those funds to support companies and individuals through the crisis. In Iran, we are seeing Iran, as Ed had just said, is the worst hit country in the region. But we're seeing President Rouhani resuming low-risk economic activity in that market this week in most of Iran, next week in Tehran. There is a major risk there, clearly, but Iran is struggling because of the virus and because of sanctions. They want to, they want to avoid full-scale economic collapse, but there is a major risk of a second wave. Tehran is appealing to the IMF to approve its $5 billion loan application, $5 billion loan application. Okay, there's an important issue emerging in the Gulf and in the UAE particularly, which I'd like to, Neha, if I could invite her to touch on this. And this is the issue of South Asian workers that have become stranded without their jobs and unable to get back to their home countries. Neha, could you perhaps touch on what you've been reporting this week?
Thanks, Richard. The past, I'd say, 4 to 5 days have seen a real stepping up in the UAE and its calls for repatriation of foreign workers. Now, this is enabled by the Labour Ministry offering the Early Leave Initiative, which would allow people in the private sector that are currently not working because of the lockdown to go home and be with their families. And the UAE says this is a humanitarian gesture. But some countries in the South Asian continent are not really opening their borders. There's still flight bans in place. And these lockdowns effectively mean that there are workers in limbo because they don't necessarily have a lot of work to do over here. And the lockdowns mean we might not see them getting back on site or, in the hotel industry jobs that they might hold anytime soon. But they also can't go back home. And the non-responsive countries that the UAE has offered repatriation to will now be reconsidered, and the relationships, the labor as well as the business relationships between these non-responsive countries and the UAE might be reviewed in the weeks to come based on the fact that these offers are not being taken up, and the UAE is quite urgently appealing that these people are repatriated while they don't have any work going on here.
Can I just ask, Neha, what is your sense from speaking to people in the market that what might actually happen?
Well, the contractors that I have spoken to suggest that they'd be okay repatriating some of the workers who want to go back. And admittedly, it's not that every site worker or every supervisor in a construction company has put their hand up and said, I'd like to go back home. But I think it's also the bigger problem is, like we've pointed out in the majority of our stories this week, the countries in South Asia need to open their borders so that these people can go back. But there are some structural gaps in their healthcare systems. There are concerns that they might not be equipped to facilitate the healthcare and the quarantine sort of measures that are needed for people that are traveling into your country. So there is a bit of back and forth that is that was unexpected, I believe. Maybe a week ago, we wouldn't have foreseen this.
Just, we've had a quick question that has come in. If you could just detail which countries, I mean, are we talking about India here, or is it Sri Lanka, India, Bangladesh, Pakistan? Is it the whole of, all of the countries, and even going into, the Philippines and other Asian countries where a lot of workers come from?
The UAE hasn't named any countries, although there are multiple reports over the past week of laborers wanting to go back, but they find themselves stranded in the UAE. And it's I think, a fairly straightforward sort of system as well, when you consider that the majority of expatriates in the UAE are Indians. And there has been some discussion on the UAE's behalf as well about comments made in India about whether or not workers can be repatriated anytime soon. So the UAE hasn't named any countries. That's very important to remember. But South Asian workers are the ones that have been most vocal about wanting to go back and not being able to.
Okay, thank you. Its latest update of the outlook for the global economy. It's predicting a 3% shrinkage or decline in GDP growth globally in 2020, and that is based on a recovery, a peak in the coronavirus cases in the second quarter of this year. So that's in the next 3 months. And if we do see that peak in the growth of cases in the next few months, we'll see a 3% shrinkage in GDP growth in 2020, followed by a recovery of 5.8% in 2021. So that's the V-shaped recovery that people have talked about. The IMF does point out that if we do not see that shrinkage in coronavirus cases in Q2 in the next 3 months, there will be a further 3% shrinkage in growth in 2020. And if the continuation runs on into 2021, we could be talking about a global contraction of another 8%, or a total of 8%. So they're basing this projection on a V-shaped recovery that will start in the next 3 months, or in April, May, June. In the MENA region, it's the worst hit region because of the exposure to commodities and particularly oil price exports. This will weaken the fiscal capacity of the governments across the MENA region. We also have an outsized impact of the travel and tourism sector in countries like Egypt and in Dubai, obviously, and Saudi Arabia, of course, has recently, they have the pilgrim market, but also recently opening up their wider tourism market. We're also likely to see, as a consequence, reduced capital spending on infrastructure, according to the IMF, over the next 2 years. They're projecting $35 a barrel as the average price for oil over the next, over 2020 and 2021. Now, when most budgets have been set at around a break-even point of $70 a barrel in the region, that is a significant fiscal impairment for the governments in this region. And of course, they will draw down on reserves to carry on spending. They will use debt, they will raise debt to carry on spending, but there's no question there will be reduced capital spending as the governments try and manage their. And of course, there is the stress on the global financial system as a result of the stimulus packages and the lower interest rates, and the depreciating asset balance sheets for the banks and for government, and of course the unemployment and 2.3% in 2020, recovering quite strongly by 2.9% in 2021, and in the UAE a 3.5% decline in 2020. And you can see at the bottom of the slide there, or just sort of 2/3 of the way down, the worst affected markets in the region, according to the IMF. Lebanon, reasons in Algeria and Iraq are major oil exporters and very exposed to the energy markets. Okay, so that is the economic outlook. Just summarizing briefly the IMF projections. We'll go into more detail on that next week, I think, and certainly on MEED.com you can see more data. If I now hand over to Ed.
Okay, thank you, Richard. So hi everyone. I thought it would be a good opportunity now to just look at the projects market data in particular, and seeing how it's performed since now we're a few weeks into the lockdown and the pandemic, and to understand how it's being impacted precisely. So this data is taken from MEED Projects, MEED's project tracking service, and we've been tracking projects very closely over the last few weeks to see what's happening in the market. And you can see here 20 or so sample projects which have been awarded since the beginning of March during this lockdown pandemic period. And you can see that despite the lockdown, despite the closure of much of the world's economy, projects are still being awarded, contracts are being let, tenders are being issued, bids are being submitted, and of course, as we know, construction is one of the exceptions, and construction workers are still allowed to go to site and continue on with projects, which I guess also emphasizes the importance of the projects market for the local economies and how important the government views the sector overall for the health of the economy. So you can see here a group of interesting projects, selection of projects awarded over the last 6 weeks or so. The largest is the King Faisal Air Academy Construction Relocation Project for the Ministry of Defense in Saudi Arabia. A similar project was also been awarded recently, which is the King Salman Air Base relocation project. So 2 multi-billion-dollar contracts awarded in the kingdom, and are also linked to the Saudi 2030 vision. And so 2 critical projects. On the water side, we've seen the Jubail 3 IWP awarded, an $800 million deal, which is also very significant and highlights the kingdom in plans to continue investing in the water sector despite this, this difficult time. Likewise, in Oman, we've seen an award to Larsen & Toubro for the Al Dakhiliya water transmission system to transmit water from desalination plants to the interior. We've seen a couple of Ashghal jobs for flood prevention schemes in Qatar. We've seen, very interestingly, the award of the long-awaited first phase for the new traders market in Jebel Ali. This was a contract awarded to Aerolink. And Aerolink has also recently awarded the Wonderland theme park reconstruction job on the Dubai Creek. So work in Dubai is also continuing in the real estate side. Another project recently awarded was the Ciel Tower, the world's tallest hotel tower in the Dubai Marina, that was awarded to China Railway 18th Group. And I think we'll be talking about the emergence of the Chinese contractors and their increasing dominance on the market later on in this presentation. Anyway, you can see from this table that there are a fair number of projects awarded, work continues, awards are continuing to be made, and we've seen more than $5 billion of contracts awarded since the beginning of March. So that's very encouraging. If we can go into the next slide, please. And this one, in this slide, we're looking forward to contracts where bids are due to be submitted by the end of May, the next few weeks. And again, it gives you a sense of the large amount of work in the pipeline, in tender. It's led by the LNG program in Qatar, which is a huge program worth up to $20 billion. It's then followed by the 4 major packages in the Hail and Ghasha sour gas development. We've also got the Facility E IWPP bids due to be submitted in the next few weeks in Qatar. And we've got the Guggenheim Museum, we've got the Sharjah International Main Works contract, we've got Qiddiya Utilities package, and a range of other big projects across the region, well in excess of $30 billion. Now, it may well be that some of the deadlines for these projects are extended beyond the end of May. Nonetheless, it just goes to show that, that there is still a lot of activity in the market. A lot of estimation and tendering departments are very busy preparing their offers, and it also signifies some positivity for the year ahead, as you would expect that the majority of these projects would be awarded by the end of the year. So the depth of the market is certainly exaggerated. There's still some life in it, and we'll hopefully have a better picture over the next few weeks when we can look back and see what's happened. But fingers crossed, so far so good. Yes, there has been some impact, but work in many cases continues. Thank you.
Okay, thank you. So I'm going to hand over to Indrajit. So thanks for that, Ed. And I apologize to everyone for the technical glitches. This is the problem with sharing bandwidth when you've got e-learning happening at the same time in the neighboring room. So we had this major oil producers meeting at the start of the week, which was intended to bring some confidence and stability back to the oil markets. If Indrajit is with us, I've prepared this slide. Could you perhaps talk about the main points, Indrajit? and why we should be, are we going to see a sudden rebound in prices, and what do you think the outlook is?
Thanks, Richard, and hello to everyone watching this week's webinar. And to top it all, this morning's been filled with reports of there being a tanker attack off the coast of Iran, although that has not had any impact in the oil markets yet. Speaking of the OPEC Plus deal, obviously this has happened in the backdrop of high and intense political drama. The meeting originally happened on the 9th of April and it dragged on until the 12th. The oil markets were obviously shut on Monday for the Easter holidays, but when it opened on Tuesday, there was a sharp retort from the market in terms of a sort of a negative approach to the deal. Yes, the output cut agreement is historic by every account, but how historic it will be in reality is a question that will be answered at the end of Q2. The deal obviously calls for all OPEC Plus producers to collectively reduce output by 9.7 million barrels a day. Although even the most optimistic demand forecasts for the second quarter say there'll be a demand erosion of at least 18.5 million barrels a day. So that deal clearly falling short of the required balance that needed to be sort of inculcated in the market. Prices currently are trading at under $30 a barrel, as you can see as we speak. Obviously, Q2 will sort of offer more or less a very negative outlook. Oil prices are expected to stay between the $30 to $32 a barrel mark. A recovery can be expected to happen from Q3 onwards, with the average price for Brent for the whole of 2020 now expected to be in the range of $35 to $40 a barrel. Obviously, the deals had a major sort of shock from Mexico, a non-OPEC oil producers, which obviously refused to shoulder the 400,000 barrels a day of cuts that it was expected to be responsible for, instead only agreeing to cut by 100,000 barrels a day. America, I mean, speaking of the US president, who actually intervened in the market share campaign between Saudi and Russia, got them on the table, but sort of fell short of getting his own oil producers to agree to any OPEC Plus cooperation mechanism. So all in all, we are having an agreement to cut 9.7 million barrels a day for the whole of Q2 2020, whereas demand erosion could be to the tune of 20 million barrels a day. Prices, as a result, are expected to remain quite low, between $28 to $30 a barrel for the whole of Q2.
Is your sense, Indrajit, that in the long run, this is actually good for OPEC producers and for Saudi Arabia? What it has done is show that actually Arab oil and OPEC oil is still absolutely essential, despite US shale and all these others. And actually, once we get through the crisis and the kind of rebalance in the markets, that there's now a stronger hand for the OPEC producers.
There certainly is. Gulf Arab oil is certainly very relevant to the market, but is the deal, which has been dubbed as historic, obviously it is historic, 9.7 million barrels a day is quite a significant number, never been achieved in the past. But is that going to have a real impact is the question. I mean, the deal's historic, but we are faced with unprecedented circumstances as well. There are some predictions that say that overall demand reduction for the whole of 2020 might average 35 million barrels a day, to which the response has only been a meager 10 million barrels a day of cuts.
Okay. Now, Ed, any questions in there that you think might be pertinent?
There hasn't been necessarily a question so far on the project market section that I've done, but Eddie O'Sullivan, the former MEED editor and editor-in-chief, has a comment that about the oil market. And he says that the IEA forecast a 9.3 million barrel a day drop in demand for 2020, despite what it called a solid start by producers following a record deal to curb supply in response to the coronavirus pandemic. So clearly there is a very sharp fall, as we all know, in the oil market, and we'll wait and see what this latest, as Indrajit says, we'll wait and see what this latest cut does to the market and how it impacts prices. But no, Richard, you're free to go on to the next slides. There's no questions at the moment.
Okay, thank you. So I'm going to hand over to you, Neha, to comment on these stories that you and Colin have been writing this week. You were particularly interested in the Sharjah airport tender.
Yes, that's right. And MEED Projects as well has been covering the Sharjah airport expansion tender. Contractors have submitted pre-qualification documents that happened in January. Tenders have now been released for the main contract to expand the airport. And this is a massive project. It is, in fact, one of the few projects that, as Ed pointed out, proves that it's not all doom and gloom in the market right now. There's about 30 to 40 contractors that have been invited. And it's an interesting development, considering as well that the transport sector, we're expecting it to be hit pretty badly by the coronavirus pandemic, and just the fact that people will want to probably travel less even after it's over. But the project, the Sharjah airport expansion, really proves that it is one of these critical infrastructure schemes that the UAE and the Sharjah government remain committed to, and that even if the processes related to tendering slow down due to coronavirus, it's one of those developments that is not going to go away. We're not going to forget about purely because it is so necessary for the Emirate. I'll let Colin explain the Saudi real estate story now.
Yeah, I think this story is, it's not really a COVID-19 stimulus story, but it's a similar move in the fact that they're just moving to reduce their rates again, which makes it cheaper effectively for people in Saudi Arabia to build their own homes, which is a key part of Vision 2030, to get more people owning their own homes. So making it cheaper for mortgages helps satisfy that. And then at the same time, it comes at a time when there's a lot of other moves to try and stimulate the economy. So I think it's not a stimulus measure, but it's linked in the fact that it's just making the market a bit more liquid.
What's your sense, Colin, of what's going on in Saudi construction? I received a call last night from an agency, a representative from Reza, the real estate developer in Saudi Arabia. It's part of the Public Investment Fund, and they say they are not delaying anything. Everything is going ahead. They've got some major housing programs and real estate programs. And I've not heard, as Ed was just saying, there's no evidence for anything being put back. Do you get the sense that really it's business as usual?
I think there's a few talking points there. I think a lot of the work in Saudi Arabia is really at either end of the delivery schedule. So you've got work that's been completed, which is at quite an advanced stage that's being finishing up. And then on the other end of the spectrum, you've got work that's in the early stages of development, which is still very much in a sort of planning, design, engineering phase. The work that's being completed, work's still continuing on site. I think there are challenges for contractors in Saudi Arabia at the moment. There's people being put on leave, having salaries reduced at major contractors. So to say there isn't an impact of what's going on, I don't think is correct. I think there is an impact that's hitting construction companies where it hurts in their finances. In terms of project progress for the newer projects that are at the early stage, I don't think they've been affected as greatly. They're not at the construction stage. Okay, there's quite a lot of money being spent on things like consultancy fees, but compared to the big construction programs, it's not a huge amount of money. And a lot of that work, it is quite feasible to do it remotely and sort of comply with all these lockdown measures as well. So yes, I think that there are quite a lot of things proceeding at the early stage. The work that's at the end stage, yes, that's continuing as well, but I think that's hamstrung by all the sort of lockdown measures and things like that. And also, there's still problems with cash flow in Saudi Arabia, despite a lot of efforts to try and resolve that problem. I think a lot of contractors are coming into this crisis from a position of weakness, and this is really just something they're not able to deal with.
Well, let's move on to the next slide, which you've been looking at the MEED's annual GCC contractors survey. And so you've been looking at some of the big trends as well as the immediate impacts of COVID-19 on the contractors. Some very interesting conclusions here that you've come up with, and this is being published on MEED.com in the next couple of days. So this is an early summary from Colin, but the stuff about China I thought was very interesting. Could you perhaps go through some of your main findings from your research?
Yeah, I mean, I think really the tables are really just a continuation of a theme which has been going on for a couple of years now. What's really been happening in the marketplace is that it's become less attractive for a lot of international players. So you've seen them withdraw or scale back their operations. So they've fallen out of the various league tables, if you could call it that. At the same time, you're seeing a shift in what's happening with the local players as well. The traditional local players have had a difficult 3, 4, 5 years, and they've been sort of squeezed down the rankings a little bit, and that's been replaced by people who are not as big local players in the past. So they've sort of stepped in and filled the void there. And in the place of the internationals who've withdrawn, I think really the story over the last probably 3 years has been the story of Chinese contractors, and we're seeing them really rising up the rankings. I mean, possibly the most interesting event I attended last year from a construction point of view is the signing of a housing construction deal in Bahrain. And I spoke to the housing minister afterwards. The contract was from memory, it was 2,000 houses. It was signed with a Chinese contractor. And I spoke to him afterwards. And really, the Bahrain government had been courting Chinese contractors for 3, 4 years. They've been trying to get them involved in the Bahrain housing program. And then this one company finally came through and signed a contract. And tellingly, the contract had a 7-year finance package with it as well. So that's something that really makes them a real force to contend with, particularly when it comes to government work and working for a government such as Bahrain, which doesn't have quite the financial strength that other countries and other developers do. So I think the Chinese offering at the moment is very compelling, and I think I would have made that comment even before the sort of the COVID-19 pandemic. Looking forward, obviously the thing that the question that crops up immediately when you start thinking about what next is, okay, we've had a market where China's playing an increasingly important role, and obviously the pandemic first started in China. So you start asking that question, well, is China's position going to be eroded, or will it in fact possibly be strengthened? There's an argument that position could be strengthened as the Chinese domestic market isn't as strong as it used to be, and their contractors need to look overseas. I think I've mentioned previously, if you look at what happened with things like the Asian financial crisis and the global financial crisis, you have contractors starting to look overseas more aggressively for work when their home markets aren't doing so well.
If I could just interrupt you there, Colin, sorry to interrupt. We've had a question that's come in on this topic of Chinese contractors, and perhaps it's one for you and Indrajit together. The question here is about, do you think this the rise in the Chinese contractors will also be seen in the oil and gas EPC sector as well as in the straight civils and building construction sector? Maybe Indrajit, do you have a thought on that?
So, I mean, Chinese contractors obviously have ruled the roost in the last so many years, but obviously post the COVID-19 crisis and the lockdowns being lifted, we might enter into a different new world altogether. I mean, even the conventional LTAs the Ramco has had, and even in ADNOC. So I mean, my understanding is that the bigger markets of Saudi and UAE hasn't had so much of Chinese contract involvement. Those have been only in pockets such as Oman, Kuwait, a bit in Iraq. Obviously, Iraq is very heavily dominated by Chinese contractors. But I think in the oil and gas market, clients like to keep a balance across the board. So it's never really been over dependence on Chinese contractors. Obviously, okay. The story might be a lot different in construction.
Okay, I think so. Thank you for that, Colin. Thank you for that, Indrajit. We're squeezed for time, so I'm going to move on to the next segment. If we could have the next slide, please, Indrajit. Nabil. If we could have the next slide. I think it's Saudi renewables. So we're going to move over to the energy sector. Now, Jennifer Aguinaldo, our energy and technology editor, you wrote this story that we can see on screen about Saudi tendering its third renewables round. There's been lots of talk about the lower oil prices removing the competitiveness of renewables and the disruption to the photovoltaic supply chain from China, damaging the renewables trajectory as well. So perhaps you can tell us, it looks like everything is going ahead without any concerns.
Hi Richard, yeah, so basically this shows that Saudi Arabia's renewable energy project development office is sticking to its timeline. So it's announced last year that it's gonna tender the third round of the renewables project in March, and it did so in the first week of April. So there are a lot of scenarios in terms of the impact of COVID-19 and low oil prices to renewables projects, and I think it's being hotly debated everywhere, here in the region as well as in Europe, among others. But I think what this shows is several things. So number one, the solar IPP projects under Saudi Arabia's NREP are 100% IPP. So unlike some of the solar IPP projects in other countries where the government client would have some equities, the Saudi projects are 100% IPP projects, which means there's a limited exposure for the government, and therefore they're also less likely to be very reactive to low oil prices. However, having said that, there's also some concern in terms of the availability, or in terms of liquidity post COVID-19. So there's certain ways to react to this. For some analysts, they think it's an opportunity for Saudi Arabia to diversify its selection of developers, apart from Aqua Power being a main player here. There's an increasing, we see award of projects to other developers as well, and most likely we're going to see perhaps a more balanced sort of mix between Chinese and other developers and EPC contractors, whether they're from Europe, from South Korea or Japan. So that's in terms of liquidity crunch from lenders. And the other thing to consider, I guess, is we need, there's some concern in terms of developers being more selective in their future investments. So basically, it's very clear that this round of the renewables projects will have to contend with more issues, with more complexities than the previous one, the round 2, which REPDO has already shortlisted bidders for the week before last.
Okay. Thank you for that, Jenny. We're now going to move on. If we can move to the next slide, please, Nabil. We're going to move on to a focus on Egypt. Now, if John Bambridge is on the line, John is MEED's features and analysis editor, and he's been preparing with the team our next market focus report on Egypt. And I've got a selection of headlines from that report. We'll go briefly start some headline. Where is the Egyptian economy at the moment? What is the projection for growth? And we've had a question from one of our attendees who wants to know about some fiscal data, the size of Egypt's budget deficit, its current account deficits, and some of these fiscal information. So perhaps, John, if you could give us a quick 2-minute summary of the Egyptian picture.
Okay, yes. Okay, thank you, Richard. Well, so in the latest IMF report, Egypt's kind of emerged as the wild card in the MENA region. It's actually the only regional economy that's projected to see positive growth in 2020. That's been put at 2% by the IMF. About 2 weeks ago, the Egyptian government put out its own figures, where it projects actually an annual growth rate of, was done it by fiscal year, but for the fiscal year of 2019-2020, it's forecasting 5.1%, and then 3.5% for the 2021 to 2020 to 2021 fiscal year. Obviously, both those projections being the positive growth figures, which kind of sets Egypt apart from the vast majority of regional economies, which are both oil exporters and oil importers. So regardless of which of these two outlooks you're looking at, there's the implication of considerable level of resilience within the Egyptian economy. There are a number of possible reasons for this. One is that Cairo's restrictions have actually not been as severe as many countries. In terms of their response to the COVID crisis. They haven't enforced a full lockdown. They're still at a stage where there are curfews and certain segments are stopped, air traffic, transportation, education, leisure, entertainment, and non-essential retail operations. But by and large, Egyptians are, in most sectors that aren't in those few, are still going around their daily business. The public sector is still going to work with some staff reductions. But general business is continuing.
What's the sense on the pressure on the government then, in terms of financial pressure or fiscal pressure?
It's kind of it's a mixed picture. Inflation's set to fall in the forecast of 2020 by the IMF, falling from 10% to a double-digit inflation now down to 5.9%, which actually could provide some relief to kind of companies and consumers and potentially even encourage spending in some sectors. At the same time, the outlook for Egypt's current account is actually improved slightly. So the current account balance is being expected to kind of slide from negative 3.1% in 2019 to minus 4.3% in 2020. Now it's forecast at minus 2.8. So actually, it's an improvement in the current account balance. In Egypt's case, the main factor behind its current account imbalance is its trade imbalance. So it imports roughly twice the value of goods that it exports. So part of the reason why for the forecast redress in Egypt's current account balance is likely to be an expected fall in imports, particularly possibly kind of luxury items, whilst the kind of logistics industry and supply chain operations focus on daily foodstuffs and essentials. So that could be one reason why Egypt's showing some slightly interesting trends. On the fiscal side, there's not so much of a shift in the country's fiscal balance. It's projected to move from minus 7.7% in 2020 to minus 7%, so a less than 1% change. However, it is interesting to note that previously Egypt's fiscal trend had been expected to, its imbalance was meant to increase, so it was minus 7.6% in 2019. So actually we're expecting a minor correction. The IMF hasn't actually released their full regional outlook, so it's not entirely clear why they project it like that. But one potential reason could be reduced spending. So actually it might actually curb the government's capital spending plans, which obviously then that could, in theory, have an impact on project activity and other sectors. However, from a fiscal perspective, the government isn't looking too bad. Obviously, in last May, the Egyptian government received the final tranche of funding from the IMF. It's also making progress towards reducing its GDP debt to its debt to GDP ratio. It's brought that back down from more than 100% to the mid 80s. It's still unclear how that could be impacted in this year, but obviously from the fiscal standpoint, its situation doesn't appear to be worsening considerably.
Okay, thanks, John. If I can sort of interrupt you there, As we are, I think Richard has unfortunately had some more internet problems, so I'll just take over from this portion. There are some other parts of the report looking at some of the projects developments in Egypt. I don't know whether you or any of the other journalists would wish to come in here on what's happening on the project side. I can see obviously Egypt's focusing on railways, metros and trams, and is also investing a lot in water. I don't know whether anyone wishes to come in on that. Perhaps Jenny, have you got any comments on the...
So just as a little introduction to the project's activity picture, so in February, a kind of key moment in Egyptian kind of history was the fact that it just passed 100 million people. That's generated a lot of headlines, but most of those headlines have been to do with the supposed kind of what that means for Egyptian infrastructure. So there are concerns over the provision of utilities and various other kind of forms of infrastructure, transport, etc. in Egypt. So a lot of the project spending that you're seeing in Egypt right now is focused on redressing the shortfall in infrastructure. So we're seeing that in the water sector, power sector, and transport sector. So yeah, maybe Jenny or Neha would like to speak more on those points.
And I'm sure an extra 2 million people a year in terms of population growth certainly helps accelerate the need for infrastructure. Jenny, as you said, as John said, do you have any comment on the power and water sector? Because I know there's been a lot of investment in Egypt in that sector recently.
Yeah, certainly. So in terms of the the power and water sectors in Egypt are in opposite sort of situation, if you will, because with power we've seen that they've built enough capacity to be at a surplus at the moment. But in terms of water, I think the misuse of the Nile River has been very well documented. So Egypt as a whole is way below the world threshold for water supply per capita, which is 1,000 cubic meter per capita annually. So yeah, as Ed has just pointed out, there's been a lot of awards in recent years, in recent months, for small water desalination projects in various governorates in Egypt. Because again, the government seems to have finally recognized that they need to build other sources of water. There's most recently the government has appointed Aqua Power to conduct a feasibility study on solar powered desalination projects as well, which is significant in two ways, because number one, now they've got surplus capacity, and they will have to keep building renewable energy capacity as well. So so they can use some of this energy produced to sort of power desalination plants, which are badly required across Egypt. I think there's not much time left. I think Will.
Yes, thanks for that. I was going to just now turn to Will Crisp, MEED's oil and gas reporter. Will's been writing quite a bit recently on the oil and gas developments in Egypt. Clearly now Egypt has become more self-reliant on gas, and has been investing a lot of money now upstream and downstream. Will, what's happening in Egypt, and what are the major opportunities and challenges there?
Thanks, Ed. Like many markets in the region, the biggest challenge, of course, that it faces right now is COVID-19 and the low oil prices. Due to reforms made over recent years, it is arguably slightly better positioned than some other countries to deal with the crisis. Of course, you know, the upstream, the whole energy sector has been transformed over the last 5 years. If you visited Cairo in 2014, when you walk down the streets, the center of the streets would be lined with diesel generators because of rolling blackouts. It's kind of hard to imagine now, but you know, there was a critical lack of gas. You know, there was a dysfunctional energy subsidy system in place. Petrochemical facilities couldn't get feedstock. power companies couldn't get gas for electricity production. Everything, of course, changed in August 2014 with the discovery of Zohr by Eni. That was fast-tracked, and it sparked a lot more interest in the upstream sector. And then from 2015 to now, you know, it's been totally transformed. We've seen a lot of big upstream projects executed over that time period. Now we've got the COVID-19 crisis, we've got very low oil prices, and this is going to affect the downstream sector primarily, because that's where the focus is now for Egypt. It's gone through this 5-year phase of upstream development, and now it's looking to capitalize on the increased production of oil and gas, and it wants to add value, it wants to create jobs, it wants to develop petrochemicals. This is where the big impact's going to be for Egypt's energy sector. Although, you know, of course, it will impact the upstream sector as well. There's still projects ongoing, and these will be affected. In February, Egypt's Minister of Petroleum and Mineral Resources, Tarek El Molla, he said that the company was shifting, and in February we saw the energy minister announce a new agreement signed between EGPC and US-based Bechtel for the Suez Canal Corridor Petro Refinery contract complex. That's a huge project. It's worth potentially 6.7 billion. And you know, that's going to be up in the air now. We don't exactly know what's going to happen with that project, how much it's going to be impacted. Of course, last week I was talking about force majeure in Iraq. There, the government's intervened. It said, you know, it sent out a message, we're shutting down the sector, potentially, you know, putting a lot of projects on hold. That's not what we're seeing with Egypt. It's a very different stance. So other downstream petrochemical projects which could potentially bring in a lot more jobs and added value to the energy sector is the Taria Petrochemicals complex. It's a $10 billion chemicals project. It's in the final stages. You know, we've seen the main contracts awarded, contractors are ready to go. All they're waiting for is financial close, but that isn't going to arrive anytime soon with the state of the markets, the energy markets as they stand right now. I think one very interesting project to watch right now was announced in February, very recently. It's the Egyptian ethylene derivatives company, ETHCO. It's planning to develop, you know, it's not a big project, it's worth 180 million. So, you know, compared to these multi-billion-dollar projects, it's a lot smaller, but I think it could be a useful bellwether for the market as a whole. Of course, polybutadiene is a synthetic rubber used for the manufacture of car tires. It's
okay, sorry, Will, if I may interrupt, because we are running out of time, and I think you brought up an interesting issue about financing, and there is a question from the attendees about what the prospects are for project financing, and if financial close is going to be affected by the situation. I don't know whether you or someone else wants to come in and answer that.
Yeah, definitely. Ed, as I was saying, you know, these big projects, multi-billion-dollar projects, if you look at oil markets right now, they're so volatile. You know, I think any kind of investor is going to be looking for some kind of stability before these close. And I think, you know, with the large projects, you know, I think that I'll be very surprised if we see things like the TPC reaching financial close anytime soon. What will be interesting though is watching these smaller projects, because, you know, it's not just ETHCO that's come forward and said, you know, we're going ahead with this project. It's going to be executed within 2 years. That's what they've said. It's also the Minister for Petroleum and Mineral Resources who's come out recently, and he said his ministry is committed to implementing new projects and expansions according to their timelines. And I've been talking to people in the market, and they say they do expect Egypt to push through with projects this year. So we're expecting this kind of petrochemical facility to start execution this year. But will they be able to execute it within 2 years, as they've stated? It's going to be very interesting to watch. You know, I think that we will definitely see execution begin, but whether or not it's executed within the time frame. It remains to be seen, and it could either be, you know, a very a proud moment for the oil sector. You know, they surprised everyone before with the development of Zohr, which took place very quickly, or it could be a humiliating climb down if they can't get these projects, which they promised, executed on time due to the COVID-19 crisis.
Thank you for that, Will, and thank you, Ed, for stepping in there. We've actually reached the end of our time slot, so we're going to have to skip on to the final thank you slide and a quick note. But I would say that we've had quite a lot of questions that have come in that we've not been able to touch on. We will respond to your questions by email where possible. I just noticed one that has come in just now asking about PPP in Kuwait specifically, and I think maybe we should go into PPP a little bit next week in the webinar. Certainly Jennifer's been writing, Jenny's been writing quite a lot about the commercial models, and we just heard Will talking about it, financing issues in Egypt there. So we'll look at PPP and project finance, I think, in a bit more detail next week. And for any other questions that we haven't got to, we will reply by email in the next few days. The slides will be made available to everyone who's registered to attend. I would like to tell you about two more webinars that are quite important that I think everyone watching might be interested in. Tomorrow at 11 o'clock Dubai time, we shall be running a webinar with Mashreq Bank and the law firm Clyde & Co. The disputes partner at Clyde & Co, Michael Gross, and Clyde & Co.'s head of construction, Matthew Hayward, will be talking about contractual options. If you can't complete the deliverables on your contracts, what do you do? Is force majeure the only thing, or what other options are there? I think that's quite an important webinar, so please look on meed.com for the link if you want to attend that one. And then next week, we will have our next webinar on COVID-19 in the Middle East. We will be looking at the healthcare sector next week. Schneider Electric will be joining us to talk about hospital facilities management and some of the healthcare sector issues. And I think we will try and have a look at PPP as well and project finance. I think that brings us to the end of today. I apologize for the technical errors, and I thank Ed and all of the team for stepping in and getting us through. That was a great job, and thank you for attending this week, and we look forward to seeing you soon. Thank you.